Hello and welcome to our preview of the ECB rate decision and press conference. The first thing to note is that there are no surveyed analysts expecting a rate cut, and therefore focus may instead fall onto President Draghi's press conference. As a quick reminder of what we saw at the last press conference, it was considered to be fairly dovish. The ECB projections were downgraded for both CPI and GDP all the way up until 2018, and we saw the central bank, they raised their issue limit from 25 to 30% for all share asset purchases. In terms of expectations since the last meeting, we have seen fairly downbeat sentiment. Inflation last month that fell 0.1%, and we have seen the Euro 5-year inflation swap rate continue to trade around levels as to when QE was introduced. In terms of what the investment banks are thinking, many now suggest that ECB QE will be expanded, however few think it will be at this meeting, with many instead suggesting it will be around the turn of the year. For Deutsche Bank, they note that the possibility of a 6-month flexible expansion, while Barclays, they discuss the possibility of a cut to the deposit rate, suggesting it will re-anchor CPI expectations, given the fact that it would weaken the euro and also lower the front end of the yield curve. Elsewhere, it is worth noting that Morgan Stanley disagree with this view, that there will be a more dovish rhetoric this month, and one of their trades of the week is to long euro dollar. In terms of other issues that may crop up, Volkswagen may have an effect considering the recent emission scandal and considering they are one of the largest bond issuers in Europe. It's also worth noting that recently we have seen the central bank provide more autonomy to national central banks, and one way to get around the Volkswagen hurdle would be to continue this policy. In terms of recent speakers, the most notable has been ECB's Novotny, who last week suggested that the ECB are clearly missing their inflation target and that additional measures are needed. However, there was a slight backtracking this week when he suggested that it is too soon to discuss an expansion of quantitative easing. In terms of what we could see in terms of a reaction, if President Draghi does talk about expanding the quantitative easing program or is particularly dovish, we'll see a flattening of the Euribor curve. We could see weakness go through the euro and strength go through both equities and fixed income products. If, however, quantitative easing expansion is not mentioned, or if it is less dovish than expected, we could see the opposite effect, where we see a steepening of the Euribor curve, strength go through euro, and weakness in both fixed income and equities. Thank you for watching. Good luck.